Hi guys, my name is Jeff Gibby. I'm the Business Development Manager here at MetaStock. Thank you for watching the recorded sessions of our online trading summit. If you're interested in MetaStock, you can get a 3-for-1 offer at metastock.com/traders-summit 3-for-1. Enjoy the video. Amazing about the job that I get is I just get to work with all of these market experts. I get to really drill into what they're doing and kind of how their mentality around the market is. And Vince is such just a great technician. I love watching his video market commentaries that he does every day. I love the methodologies that he also uses. I only bring in people that I like for these events. So let's go ahead and get him started because we are about 7 minutes late and I don't want to take too much of his time away. So let's get you in here, Vince. I'm going to go ahead and turn the organizer roll over to you. And let's hope we can hear him. Vince?
Hey, Jeff, can you hear me?
I can hear you. I can see your slide too.
Excellent. How are you?
Doing really good. We had you'll be happy to know we had our major technical issue with GoToWebinar already, so it's not going to be you that hits it.
That's good to hear.
What question? What do you want to add to what I just introduced you?
First of all, thanks for having me on, and thanks for being with us, everyone, especially on a Saturday morning. Great to be here with you. I'm really glad to be here this week because based on yesterday's market action, I think we're beginning a new phase, and I think the fall season is going to be extremely exciting. And I'd like to share a setup that I've been working with for a long time that's based on trend and momentum that I think will really help during the fall. So I'm super excited about it.
All right, I'm going to turn the time over to you.
Excellent. Thanks again. And again, welcome everybody. Let's get started. So as I mentioned, I'd like to share a system with you that I've been using for well over a decade that's based solely on technical analysis, but really what this is all about is trading with trend and momentum. So today I'm going to spend a very small amount of time on slides and spend the bulk of the time on the charts showing you this setup. But before we get started, for those of you who may have never seen me before, I am Vince Vora. I'm the head trader here at Trading Wins, and I've been doing this for 30 years now. What you see on this slide are just some of the trades we highlighted in the past for some of our members, and we'll get to some of those as we go through the presentation. But we've developed this strategy and many others along the way, and now our strategies are used by retail traders such as yourself, as well as many hedge fund and money managers out there. Please do remember that trading can be risky, so don't trade with real money until you are completely comfortable with the system you are using. Now, in today's presentation, I am going to start off, as always, with my money management rules. I think it's the core of any trading plan, and for those of you who may have seen this before, possibly multiple times, I believe in repetition, and I will continue to go over these at every presentation because to me they really are that important. I'll take a few minutes and share those with you. Then I'll talk about the components of the system. There are only three very common ones. And then I'll bring up my live charts. We'll go through several charts, all different time frames, and hopefully we will have plenty of time for Q&A as we go through this, okay? So let's get right to it. Let's not waste any time. When it comes to money management and trading, you know, I'm sure you've heard a lot of this in the past, but the main thing is you got to be feeling good when you sit down to trade. If you're off or if you're under the weather, a little like I am right now, it's going to be more difficult for you. So make sure you have a clear mindset when you do so. But more importantly, you should always trade with an amount that feels completely insignificant to you. Now, trading is so much more about how you manage a position once you're in it than it is about selecting that entry. And even though we're going to give you a great method to select that entry with and that exit, it all comes down to how you manage that trade. And if you're worried about the amount of money you have in there, you won't be able to control your emotions and manage it appropriately. So for some of you, that might be a couple $100. For others, it'll be several thousand. The amount doesn't matter. What matters is that it feels completely insignificant to you. And one of the ways we reduce and limit risk in this market is to make sure we never put any more than 5% of our account balance in any one trade. That way, no matter what news comes out, no matter what causes that stock or that underlying to gap against us, because it does happen from time to time, the most we can do is lose 5%, and that means we live to trade another day, and that's what this is all about. So I encourage you, highly encourage you to do that. Now, the other thing is that we really can't control this market, and from time to time you do see those black swan events, those unexpected events. I hate to keep bringing it up, but 9/11 was a perfect example. You can't anticipate anything of the sort, but when it happens, you need to make sure that you're prepared and protected. And one of the ways you do that is to make sure you keep 50% of your account in reserve at all times for two reasons. One, should such an event happen and you take a sizable loss, the loss will be reduced because you only have half your account exposed. But more importantly, you still have half your account left over to put back into the markets after it's over and make back those losses. And any of you who were trading throughout that period know that 6 months after 9/11, we were right back at those highs again. So it's not only possible, it's very likely. Now, more importantly than ever in this environment, it's extremely important for you to spread out your trades, be very selective, and only trade one or two of the highest probability trade setups out there. So be selective with your trades. And the method I'm going to show you today helps you trade only when the odds are stacked in your favor and helps you select those safe areas on the chart to trade. And even though we're going to be using this method, on any given day there will be multiple setups, and I still want you to only choose one or two of those highest probability trade setups for whatever time frame you are trading. Okay? Before we move on to the charts, a couple of other quick rules that we live by. One, you'll never go broke taking profits. I'm sure you've heard about this many times, and there's always someone who challenges me on it and says that you will definitely go broke taking small profits. Well, when you see how we do this and just how small of a risk we take on each trade, you'll understand that even taking small profits, you should do very well with this. But this is really meant more for those of you who are just starting out. As you gain experience in the market, you will learn how to remain in a trade a little longer each time, but until you get there, bank those profits when you have them. Trust me, it'll pay off in spades, not only financially, but it'll help build your confidence as a trader. Okay, also, and this, if there's anything you're going to write down and walk away with today, it's this. Please do remember that when you sit down to trade, it's not about you. It's not about whether you are right or wrong. That's important. But it's all about how much money you make when you're right versus how much money you lose when you're wrong, meaning it's all about discipline and execution. And what I'm going to show you is a simple rule-based system that's very, very easy to follow. But if you don't follow those rules, it obviously won't work as well for you. So don't let your emotions into this. Focus on execution and following those rules, and you'll do extremely well. Now, as I mentioned from the top, there are only three components to the system, actually three very common, very popular indicators. The first one is the 20-period simple moving average. As Price said, and I'm sure you'll hear many of these experts today say the same thing, most of us start out with moving averages, and they can be very effective during trending markets. We use this one a little differently. We use it to judge momentum. I'll explain exactly how, but we have tested this and traded this method with different time periods, with exponential, with weighted moving averages. The fact remains that the 20-period simple moving average, even today, after all those decades of trading it, remains and is still the most consistent. So that's why we use it. Also, an indicator that has become very popular in the last few years here in America, which is the Ichimoku Kinko Hyo indicator. It's taken me years to try to pronounce it. Still not sure I do it correctly, but this indicator has been very popular in Asia for many years. It's actually used as a strategy in itself, and I'll touch more about that near the end of the presentation. But the way I use a very stripped down version of it for trend. I'll explain exactly how we do that. And lastly, an indicator that I'm sure many of you have not only heard about, but have probably used over your trading career, and that's the Relative Strength Index, or the RSI. Now, this is an indicator that's generally used to identify extreme areas of overbought and oversold conditions. We're going to use it completely different. This indicator is going to identify our setup bars. Okay, so rather than just talk about it, let me show it to you. Let me bring up my charts here and show you what I mean. Now, before I actually go through describing the indicators and the setup, one tip that I always like to add to my presentation is this. Traders, most often, we are our own worst enemies. In other words, we get in our own way when it comes to trading and make things more difficult than they really need to be. And one of the most basic things that I find with all the students that I continue to teach is that they end up trading on charts or trying to trade on charts that are extremely difficult to trade. So one of the basic things you can do is remove the indicators off your screen and just look at the price action. Okay? And your first job as a trader is to build a watch list of stocks that are either trending strongly upward or strongly downward. When you build a watch list like that, you're already going to be half the way to being profitable, okay? And it may sound silly at the beginning, but trust me and listen to me carefully, because when you're trading a chart that looks like this, American Waterworks, is very predictable, okay? Look at the candles, very similar in size, not many wicks or tails on these candles, and they're just slowly trending in one direction. It's very predictable, very easy to trade. Now, I'll show you exactly how to select and pinpoint those entries as we go through. But here, let me show you a different chart. Let's go to Whole Foods markets. Now, look at this. You know, if you had to guess the next direction of this stock, would you be able to, or would it simply be a guess? It would definitely be a guess. It's impossible. It's just back and forth. I mean, it's one of the messiest charts I've seen in a long time. And trying to pick off those trades in between these brief stretches of momentum here is very difficult. So the last thing you want to do when you're trading is guess. Of course, none of us have that crystal ball and can predict that future event, but we can put the odds in our favor, and we can use proven patterns and proven setups that have worked over and over and over again, not just through many years of trading, but through many different types of markets. And I'm going to share one of those with you today. So again, focus on those nice, clean, trending charts. Start with a watch list like that, and you'll be fine. Now, these three components, this blue line you see here, as I hover over it, you'll see it's a moving average. It's a simple 20 based on the close, right? And we're going to be using that to judge momentum. And the way we do so, an easy way to judge momentum, first of all, can be on the slope of the candles or your price bars, all right? So what you're looking for is a slope higher, okay? Now, you can have a slight slope higher, you can have a bit more significant slope, or you can have very significant slope higher. The more significant that slope, the more momentum you have on your side. So you always want to see that slope as high as possible. And in the opposite direction, when you're talking about a short trade, you want to see that slope trending lower, as low as possible. Okay? But the real reason why we use that 20 is because throughout every up move or every down move, there's always a zigzag, or most often there is. Rarely do you see just a straight move down. So throughout these pullbacks, that's where your opportunities to enter show themselves. And now, if you're simply judging momentum based on the slope of price, during those pullbacks here, you could easily make the mistake of thinking that this is downward momentum, fairly sharp downward momentum. But if that 20-period moving average maintains its slope higher, then it helps you understand that this is merely a pullback, a short-term pullback before a continuation of that trend, and that's extremely important. Okay? So that is why you want to be able to read that very quickly and easily on any chart, and that's where that 20-period moving average comes in. Here, this shaded area, this is the stripped down version of the Ichimoku cloud indicator. Now, normally there's a number of other moving averages associated with this. We take those off, and I'll show you quickly, for those of you who are already using MetaStock, if you just go into the properties here, and you go into the color style tab, the first 1, 2, 3, 4 tabs here, so the closing price, the Tenkan-sen, Kijun-sen, and the Chiku, if you move over to the style tab and select invisible, you will hide those lines, and then that will leave you with the other 4, which just make up the cloud portion. Okay, it's very simple to do, but basically how we're using this indicator is for trend, and it's very simple. If the candles and the moving average are both above the cloud, that is what we consider an uptrend. If they're both below the cloud, that's a downtrend, and if one or both are overlapping the cloud, that's a sideways consolidating market that we do not want to use this strategy for. Okay? So when you bring up any chart, you're obviously going to be looking at the far right here, at the current candle, and there's 2 things you want to immediately be able to spot: trend and momentum. So in this case, on AWK, it's clear. Do we have trend? Absolutely. We have both the candles and the moving average below the cloud. It's a downtrend. Do we have momentum in the direction of that trend? Yes, we do. That 20-period moving average is sloping significantly lower. And what I really look for some of the higher setups is about a 45-degree angle on that moving average. That's considered a very strong trend. So clearly, AWK is trending very strongly to the downside right now. Once you have both of those, okay, and you start seeing a pullback on that stock, making its way back towards that moving average, that's when you want to go down here and use the RSI. Now the RSI, let me hover over it. You can see it's not the defaulted setting of 14. Most charting platforms have a default setting of 14. We use 7. We want a much more responsive RSI, so we cut that in half. Okay, and also the usual RSI will have lines at the 70 and the 30 level, or the 80-20 level. Again, it's normally used to identify overbought and oversold conditions. We remove those lines and draw one right down the middle at the 50 line. Okay? So it's a 7-period RSI with a line down the middle at the 50 level. So now that we've identified those indicators that we use, let's talk about the setup for long and short. And let's go to NTAP. How many of you have traded NTAP in the past? This was one that I traded very heavily in the 90s, I remember, and more recently. But now, let's have a look at this. Let's have a look at NTAP. And there's another thing that I want you to really walk away with here. Here's a tip that when you're using this 20-period moving average and the Ichimoku cloud, here's something that will give you a heads up to the next big move coming down the stretch. And that is when that moving average crosses from one side of the cloud to the other with momentum already in place. In other words, if you look back in here, back in December of 2015, we had that moving average cross from above the cloud to below it with that slope, with a significant slope. That almost always gives you a heads up that an extended move is going to occur in that direction. And remember I said build a watch list with stocks that are nicely trending? One other thing you can do is build a watch list of stocks where the 20-period moving average is crossing through the cloud, one way or the other, doesn't matter, with momentum. Okay, if it crosses with slope, it's huge. There's usually a big move coming. You can see it here. You can see it back here. So what you look for is that move coming through And then once you have a clear defined trend, so here price and moving average are below the cloud, that's a downtrend. Momentum clearly sloping lower, so that supports our downtrend. Now we turn our attention to the RSI, and what we're looking for a short trade is for the RSI to move from above that 50 line to below that 50 line. It's the candle associated with the cross of that 50 line on the RSI that's going to be our setup candle. So let me put my crosshairs on and show you. If I highlight this little green candle here, which was the December 7th candle, if you look down at the RSI, you can see it was clearly above the 50 line on that day. But on the very next candle here, now you can see the RSI is clearly below the 50 line. Okay, that makes this little red candle our setup candle. So let me highlight that for you, and I'll zoom in for all of you in a second in case you're working on a smaller screen here. Let's zoom in and bring this over. There we go. So there's our setup candle right in here. Now that we've identified our setup candle, what we're looking for is a trade 1 tick or 1 penny below the low, the absolute low of this candle. Okay, and once we do get that trade below that low, we go short, meaning you can short the stock, you can buy a put option, you can sell a call credit spread. There's many ways to do this. But once your short gets triggered, your stop would be placed just above the high of the most recent pivot high, which is usually 1 or 2 candles behind. So if you look at that, it's a very, very tight stop. I'm going to actually, let me thicken this line here, change colors. Let's see if that'll help. Maybe you can see that a little clearer. There it is. Okay, and then it just becomes a matter of managing that trade. Now, because you have trend and momentum, very sharp momentum already on your side, okay, this reversal, okay, the cross from above to below that RSI, that is what identifies your turning point, your reversal. And that's what kicks off a continuation of that move lower. So the real exciting part here is where, look at the amount of risk you have on from the low of that setup bar to the most recent pivot high here, okay? Very, very small amount of risk on, but your potential return is huge compared to that. And that's usually the case. So in the long run, what you want to see are more winners than losers, but more importantly, your winners being much larger than your losers, okay? Now, if we scroll forward here more recently, we crossed from below that cloud to above it, okay? The momentum wasn't as sharp, but keep in mind that I've zoomed in here, so we've lost some of the slope. But that gave us a heads up that a bigger move was coming. All we had to do was wait for the price and the moving average to both clearly move above the cloud, which we did, and then start that pullback. Once we started that pullback, we turn our attention to the RSI, and we wait for that RSI to cross from below to above. Now, sometimes it comes right to that 50 level and bounces, and that's okay too, but it does have to touch 50, okay? If it gets to 50.1 and turns, it's not the same. I'm a stickler for the rules, and it has to come back to that 50 line and then bounce. So in this case, if you look at this red candle here on August 2nd, you can see the RSI was still above that 50 line, but on the green line here, that's when it had bounced and moved back above. And so the little green August 3rd candle is our setup candle. Again, let me identify this for you quickly. There it is. And now what we're looking for from our setup candle is a trade 1 tick or 1 penny above the high of that candle. And our most recent low pivot, which is actually just a couple candles away here, becomes our stop. So a very small risk. Again, there's that potential return. Not rocket science by any means. What it is is trading with trend and momentum on your side. And the tools we're using, that Ichimoku cloud for trend and that 20-period moving average, or the slope of it, for momentum, really the combination of those make all the difference. That's what I mean by stacking the odds in your favor. And once it fires off, then it's just that momentum, riding that wave higher, okay, and managing that trade. Let's look at a few more here, and we'll also look at different time frames, different instruments. It's very simple. Let me zoom out for you here. Here's another stock, BVN, that tends to trend very nicely. And this one, similar to AWK, make trading so much easier because all you're trying to do here is pinpoint the right times to get in the stock. Okay? So here's your heads up. Look at this. From one side of the cloud to the other, that moving average crossed with slope already intact. That tells you that most likely there's a big move coming in that direction. So once the candles clear, once the moving average clears, you know you've got an uptrend. If you already have a slope in place, you have momentum on your side. All you wait for is a slight pullback, and it doesn't matter whether that setup candle happens in front of the moving average, whether it overlaps it, or whether it happens below the moving average. What matters is that once you identify the setup candle, and in this case, let me zoom in for you a little here. In this case, it's right here. Let me put this, highlight it right there. Sorry, I've highlighted both candles, but it's the green one. So the red is where we cross below that 50 line. The green is where we cross back above. Let me take off my cross here so clear this up for you. Okay, right here. So now what do we wait for? We wait for one tick or 1 penny of a trade above the high of that setup bar. Once we get it, we go long, and again, we can buy the stock, we can buy a call option, we can sell a put credit spread. Great idea here, putting it right behind the cloud. That would be pretty easy. And then it's just a matter of managing that trade higher, okay? Your stop goes just below the most recent pivot low, and off you go. And then what you'll find is that normally during a sustained trend, you're going to get multiple opportunities to enter, meaning you have that zigzag pattern of the stock. So you'll see other pullbacks. And here's another one right down here. The RSI dips below the 50 line and then back above it. And off it goes again. Comes back here, dips below, there's that RSI. Back to that 50 line, slightly below it, and back above. Now, I often get the question, how low, if the RSI goes way below the 50 line, is it still a good trade? Well, what you're going to find is the lower it goes here, that means the bigger the pullback. And if this pullback goes too far, the moving average starts to flatten out like it did here, okay? So if you find that when you identify that setup candle, the moving average is flat, well, you don't want to take those trades, okay? Because you no longer have momentum on your side, and you really want to stack those odds in your favor, okay? So you got to be careful of these crosses that have a flat moving average. You want that nice slope in your favor, all right? Let's have a look at another one here, and then I'll get to different time frames. This is Aflac. Let me zoom back out. Okay. Again, remember, the crosses from one side to the other, very, very important, okay, with momentum. There's another one that leads to the next solid sustained move. And then it's just a matter of picking off those pullbacks. So there's this one, price breaches first. You'll find that usually price breaches that cloud first, and then during that pullback, it gives that moving average time to come through, and when they meet up, there's that cross of the RSI from above to below, and there's that next move. Then you get that cross above, you get that first pullback, there's that cross of the RSI, and off you go. So what you're doing is selecting the safe areas to trade. This is a very conservative system. Now, if you're more aggressive, you can certainly leverage it. A, with options, B, with every subsequent setup along that stretch, you could add to your position if you like. If you're as conservative as I am, you wouldn't. You would maintain your original position and use every subsequent setup as further confirmation that you're in the right trade and you should remain in that trade, okay? But again, as long as you have that strong momentum on your side, it becomes very, very simple and easy to trade. Let's have a look at, let's change time frames. How many of you trade the weekly time frame? Are you managing a retirement account with weekly, monthly time frames? I'll also get to the intraday ones as well. So a few of you say yes, absolutely. Let's have a look at a few weekly time frames. You know, with any system based solely on technical analysis, you'll find that the higher the time frame, the more accurate it becomes. But I'll show you how it'll work on all of them regardless. But let's look at a few weeklies here. Let's see, XC energy sector has been pretty crazy the past year or so. Let's have a look. And here, again, it becomes so simple. Now, I've been staring at this for a long time, but I encourage you to really look for this. Look at that move through the cloud here. Okay, when you see that, okay, that gives you a heads up that, hey, there's a move in that direction coming. Now, sometimes the moves work out much bigger than others, but typically, when they aren't going to work out, they quickly turn and you don't even get any setups. Now, in here, you did get a couple of setups, and here's the nice thing about this. Number one, you're not going to have 100% winners. No one's saying that. No system out there is going to give you 100% winners. The key is to minimize your losses when you have them. So if you look at this first pullback here, after we crossed through this cloud back here in August of 2011, crossed through, we got that pullback, and there was an initial entry in here right near the end of October to go short. Okay. Now, this is why we put our stop above the most recent pivot high, which would have been back here. Reason being is sometimes we get what we call a double dip, meaning it'll cross, it'll come above, cross, and then it'll do it again. It'll quickly come back above and cross again. Now, typically, those are some of your most powerful setups, and I'll show you a few of them as we go through. There's one right in here, actually. Okay, but that's why we don't put our stop below or just above the same setup bar. We want to give ourselves a bit of a buffer. Okay, but even if it pulls back on you too far and it stops you out on that first time, it's going to be a very minimal loss. And then when it triggers again, the gain is usually much larger. Now here, I love these ones here, where you get a move from one side of the cloud to the other with momentum, and you get that pullback, and it comes back and retests the top of that cloud. Now in this particular case, the moving average started to flatten out a little, so the momentum wasn't as strong, even though the trade did work out well. But sometimes you'll still have that momentum fully intact, and you'll get a retest at the top of that cloud. And once you get that cross of that moving average, those are very, very powerful trade setups. And you can see how it launched it forward. Next pullback here, and here's the double dip right in here. Okay, so the double dip to the long side is going to look like the letter W. To the short side, it will look like the letter M. Typically very powerful. You can see that move that resulted right afterwards. And now, most recently, if you look at XEC here, look at that move we made from one side of the cloud to the other. Sharp, sharp momentum. So what are we waiting for here? We're just waiting for some kind of pullback. All right, letting that RSI move back below that 50 line and then wait for that cross back above. And when that happens, as long as the 20-period moving average is still sloping higher, that means you have trend and momentum on your side. Identify that setup bar, wait for the break of the high, and off it goes. And judging by this bearish engulfing setup we got on Friday here, looks like this pullback is about to begin. So XCC is one you want to put on your watch list. There may be a setup coming up very soon here. Let's have a look at let's do one more on the weekly, and then we'll go to the monthly, and we'll do some intraday as well. How many of you are day traders here and trade the S&P E-minis? That's usually a very common. Yeah, excellent. Mohan says, Mike, Oh, wow, we got quite a few. Okay, we'll go through those as well. So here on ConocoPhillips, again, you want nice, predictable, trending stocks, but you never want to deviate from those rules. In other words, you see how this pullback here went a little too far? Look what happened to that moving average. So even though we got a cross of that RSI back in here, look, the moving average was trending in the wrong direction. And yes, the trade worked out. It doesn't matter. I never worry about which trades I missed that way. All I want to do is put the odds in my favor and know that the majority of the time, when I do select an entry, I'll be trading in a safe area of the chart, an area where the odds are stacked on my side, and that's what this is all about. The cleaner the pullback you get, the better. And if you get it associated with that cross of the RSI, then boom, easy. And the other thing is that here's the real advantage to trading with trend and momentum on your side, is that managing a trade becomes so much easier. If you were to get in here and manage this trade higher, how difficult would that be? How many times throughout these candles here would you be second guessing yourself and wondering whether you should stay in or get out? Usually they're very, very easy trades to manage. Look at this one back in here. Now, yes, we did lose some of the momentum here. So if you didn't take this trade, totally fine, not a problem. There's usually another one coming right around the corner, and there was right back in here. Again, if you look at this, how difficult would that be to manage? Not very difficult at all. And that's the key here. Not only are you trading the safe areas, you're trading predictable underlying issues, you're making trading very, very easy on yourself. And once you gain confidence, not only in the system, but in yourself as a trader, it becomes so much easier to remain disciplined and follow those rules. And that's what this is all about. If you build those habits, then trading just becomes that rinse and repeat model. And I always say it should be boring, because if it's boring, it's profitable. You're just looking for that same setup and repeating that same, executing those same orders the same way over and over and over again. All right? What else we have here? Any forex traders? You could look at any pair. Here's the CAD against the US dollar. We follow this quite a bit for our members. Very predictable. Let me go back to the daily for you, and I'll show you the monthly on this one as well. But look at these. Very, very predictable. When you have that move from one side of the cloud to the other, you just wait for that pullback. There's that cross. Look, happening here late November last year, and boom, off it went. Took off. Down in here, look, crossed the cloud with strong momentum. He knew there was a big drop about to happen here. Okay? Pulls back, pulls back, there it is. Pulls back, there it is. All these crosses. If you pull up any chart with these settings and you go through them and you look at these crosses, okay, and you look at how many would have been profitable versus the ones that would have not. And remember, it's not 100% accurate, but the key here is how you limit your risk, always. Okay? And the other key is this. Sometimes this is overlooked, but look at this most recent action. Okay? Who would want to trade throughout this area here? I mean, unless you're trading iron condors, you really shouldn't be touching this area of the chart. This is where you get chopped up. And this is the problem with trading off moving averages alone, because they're great when they're trending. During sideways markets, you get chopped up. Okay? The market eats you alive. And that's why the rules that are wrapped around this will keep you out of this area of this chart. Now, there's a bull market somewhere, always, as we say. So even though you may not be trading the CAD-US pair for several months here, there'll be many other charts that you'll be trading. Let's have a look at some of the monthly time frames. These are beautiful. And right in here, actually, we traded the CAD-US pair based on this big cup and handle formation. But look at what's happening recently here. We got a nice swing through this cloud with momentum. Momentum is still fully intact. Nice orderly pullback, and here is that cross. And it's in the midst of making that double dip formation here. But if this fires off, you know, we're going much, much higher here. But let's look at other popular issues. How many of you like to trade Starbucks? Now, I like to trade it just to get some of my money back that I spend on coffee every day at Starbucks. But look at this move from one side of the cloud to the other. Nice and easy. And look how easy this trend is. Now imagine holding this, holding stocks like this on a monthly while collecting dividends, possibly selling some calls against your position to bring in more premium. How easy would it be to manage this? And the key, though, are those entries. Look, right in here. Here's a perfect double dip right here. And what happened afterwards? Boom. It's very clean, very clean. You get another pullback in here, another pullback. There's that second cross from there. So if you had missed one, you're in for the next leg up. Now, look, it's forming that double dip right now. Okay, right in here. It's about to form that double dip. Now, if the market continues moving lower, maybe Starbucks will continue to go with it. But should we get a bounce here, and you get that cross from below back to above that 50 line, that'll set off another trigger on Starbucks. That will mean several more months of upside on this chart. So this is one you definitely want to keep an eye out for. Now, let me just check on time. Okay for time? Let me go to those intraday time frames. For those of you who like to trade the S&P E-minis, let's have a look at those. Okay. And let's move down to, what do you like to trade, a 5-minute? 5-minute, 15-minute? What do you prefer? Here's the 5-minute chart of the S&P. Now, yesterday, we obviously got a sharp move lower. It was pretty much a sell-off, steady sell-off throughout the day. Okay, we have several of each, 5, 15 minutes. Right here. So during this period here, when it was flat, okay, didn't really want to do anything. But once we started to pick up momentum, all you're looking for are those pullbacks. Okay? Now the first setup happened down in here. Once we got this pullback here, there's that cross of the moving average right in here. Sorry, not the moving average, the RSI, from above to below that 50 line. And look at what happened the rest of the day. Down. Now, beautiful move. We get another pullback in the afternoon, usually that 1 o'clock session. There it is. There's that cross. You get another entry. Actually, you had 3 more opportunities in here to get in for that flush towards market close. Okay, let's look at the 15-minute. Let's go to custom, add 15. And there it is. Now here, actually, let's have a look at this. Let me delete this. This is what I want you to focus on. Look at this. That's a perfect double dip. Look at that. Right here. Now momentum wasn't as strong as we normally like, but it certainly was gaining a speed there. And this slight pullback, there's that momentum. I mean that double dip, that letter M, and look what happened next, straight through. And again, how difficult would it be to manage that trade and stay in this trade? And if you incorporate other parts of technical analysis or candlestick formations, look, throughout here you had bearish engulfing set up here, another one in here, another one in here. So easy to ride this wave right down into the close. And we're talking several S&P points, so pretty significant all the way across. Okay, so again, it works on equities, works on forex, any time frame, anything you like. Now, I worked for a while with Jeffrey Gibby of MetaStock, and he helped build the indicator for this, and so I want to share that with you. Let me give you an example of what we've done here, and I'm going to use Starbucks. It's a great one I like to trade, but let me show you the indicator we've put together here for you. And the way Jeffrey designed this is very easy on the eyes and actually very easy to use, because not only do you have that same template with those 3 indicators, but he's added this ribbon down here, this colored ribbon down here, that helps you identify that slope. So really, you don't have to judge whether you have a slope or how significant it is and so on. If you see this line green, that means you have an upward slope. And if it's red, you have a downward slope. And these patches of white means the moving average is flat, okay? So it's very, very simple and easy to use and read while you're going through this. Now, along with that, we've added these little diamonds and these arrows along with the exit sign. So what the diamonds mean, that they identify your setup candle. Okay? A green diamond is a long setup, and a red diamond would be a short setup. An arrow will only appear once that trade has been triggered. In this case, once that high is breached, there's that arrow. It means you go long, and it will paint every candle after that green if it's a long trade, red if it's a short trade, until you get this little exit flag. So it really does everything for you. It helps you identify when to get in and when to get out. Okay? And again, Starbucks here now on this weekly is just making its move through that cloud. So keep an eye on this going forward. You might want to add that to your watch list. There may be a setup soon if the market continues to trend lower here. So very simple, easy to read. It kind of walks you through it. But even better to assist you and to stay disciplined, because again, that's one of the main things that I found most people struggle with is discipline. He's created an expert commentary here, which if you go to view and click on expert commentary, it brings up this panel. And now you can move this to above, below, to the right side of your chart, to the left, wherever you like. But what it will do is give you a brief explanation about what the indicator does, who I am, who Trading Wins is, and but it will put this little black triangle here, which usually defaults and appears on the far right candle. But this can be moved, and it can be moved by just clicking above any candle or using these arrows here in the top left panel. But what these do is once you have either a diamond or an arrow or an exit, it will put in this text in here, and it will tell you what's going on and what you need to do. So as you see here during the setup bar, it tells you that our winning momentum strategy setup is currently signaling a long setup opportunity. That doesn't mean buy yet, but it'll tell you to confirm that it's a valid buying opportunity. You must wait for a trade above, and it gives you the specific price, so that even if you're not able to sit in front of the market, but you want to enter a buy stop order, for example, you have the price to do it with. And it will also tell you how the trade is invalidated. And that is, if you were to get a trade below the low of that setup bar first before ever trading above, you want to disqualify that trade. But it lays that out for you. It also tells you, if you're an option trader, what kind of option you want to select, what kind of expiration you want to look for, what kind of delta you want to look for. So in other words, it helps you not only set up that trade, but then throughout the life of that trade, as it moves on, it will let you know what to do, and it will identify what kind of exit or stop you're looking for. And then, of course, when it's time to exit, it will tell you that you need to exit all long positions, etc. So it really helps reinforce the rules, helps you hold your hand throughout the whole trade, and make you a more disciplined trader. And you can also scan for these setups, which is extremely important as well. If you go to the Power Console here on the top left, go to the Explorer tab, excuse me, you want to scroll down. They're alphabetized here, so mine are down at the bottom. Here's Vora, winning momentum setups. Down below, you select the instruments that you like. MetaStock has over 370,000 of them. So I like to start with the Dow, the NASDAQ, etc. And so let's just run a very, very quick scan here for you on that and show you quickly. Actually, in the interest of time, I really don't have a lot of time left, do I? I want to get to some questions. What I was going to just show you, maybe Jeffrey can show it to you, because I'm going to hand it over to him to tell you how you can get this indicator a little later on. But once you run that scan, it'll bring up the results tab where you can copy and paste those into a watch list. You can sort them. You can open a chart directly from there. It's a very, very fantastic tool. But the main benefit is it will save you so much time. It's so quick and easy to use. So it's actually a fantastic tool. So hopefully it can show you more of that. But before I get to the questions, number one, I wanted to say that the market we're in right now, based on Friday's action, I really think that there is a huge opportunity coming up for the fall session. So because, number one, MetaStock has been such a great partner for us, and as a thank you for taking the time on a Saturday to join us, we wanted to do something special for all of you. And what we've done is put together a great package to help you take advantage of that great opportunity ahead. I really think the fall season is the best time to trade, but this year is really shaping up to be huge. And we've never offered something like this before, but today, what we're offering is a package, a pro training package that includes 30 days of full access to our pro membership package. And let me just take a moment to explain what's involved there. 5 times a week from Sunday to Thursday, every night, I will send out a video to you explaining what happened in the markets that day, talking about my daily, my weekly, my monthly outlook, and that's also where I highlight all our trade setups for our members. And I give specifics. Those videos are used as a training tool. And we highlight not just trade setups from this system, but from all our systems. Also, as a pro member, you will have access to hundreds of hours of on-demand video that you can watch at your leisure. And as a real bonus, what I'm going to do is throw in our Magic of Ichimoku Pro Training course, which we recorded a couple of weeks ago. You can't find anywhere else. This is not something you're going to get on YouTube or anywhere else, but it shows you how to trade that Ichimoku cloud indicator as a strategy in itself. And you can get all of this for just $7. We really want you to see what we do here at Trading Wins and really want to set you up properly for that fall session. So just go to tradingwins.com/7. Now it is the word 7, not the number 7. tradingwins.com/7. Hopefully, staff's time to answer a couple of questions. I'm going to bring in my coaching coordinator quickly here, Raul, to help me read some off, and then I'll pass it to back to Gibby, and he'll tell you how you can get access to the MetaStock indicator. Raul?
Great teaching. Glad I could be a part of it here.
Great.
A couple of questions. First one, BC is asking, does this work with inverses as well? You know, like the inverse of the...
Oh, absolutely. It also works with, you know, a question I get a lot now, are the double and triple leveraged ETFs? Absolutely. Anything you can put a chart on, it will work.
A couple of questions. A lot of folks joining us from overseas. Does it work on overseas markets?
Yes, actually. I've traded myself in Australia and Hong Kong, and most recently I've tried this on the Nifty over in India. It works very well.
RSI level is what?
7. It's a 7-period RSI with a line drawn down the middle at the 50 level.
Why do you use a stripped-down version of the cloud here?
Because I only want to use it for trend. It's a very effective indicator, and that's why I'm throwing in that Magic of Ichimoku course. So if you want to use it as a strategy in itself, you can certainly do so, but it does a great job identifying trend.
Michael says, is the $7 offer the same service as what's on your website for $97?
Yes, absolutely it is. But again, we wanted to do this as a thank you, and because MetaStock's been such a great partner for us.
A couple of folks are asking if they can combine this approach with the engulfing pattern strategy that you have.
Absolutely, I do it, and you'll see me do it in those nightly videos. This is just one of our systems. Oh, actually, I think I missed a great component that's part of this. As part of the Pro membership, we also have live market chats. This is my favorite part. Can't believe I overlooked this. We meet twice a week with our Pro members. So twice a week, every Monday evening and Thursday morning, you get to come into our room and ask me any trading-related question you like. The whole goal there is to help you become a better trader. So it doesn't have to be questions on this indicator or anything else. Anything trading-related, I'll help you out.
Brad's asking, how do you cancel the offer after the $7 trial? Brad, just give our office a call.
Yeah, absolutely.
Call it the world's easiest cancellation policy.
That's right.
does this work on forex? You showed that, Vince. What's your favorite time frame to trade forex?
My intraday time frames are 5, 15-minute, and the hourly. Those are still my favorite time frames for forex.
Okay. Lisa says, where do you see the market going this fall?
Well, we need confirmation. We need to see some follow through, but yesterday's action was pretty interesting. I've been calling for a pullback for a while, so we may be on the cusp, but for now it's very early. It's very early. But what you want to keep an eye out for is that cloud. If you see that moving average crossing that cloud on the index charts down with momentum, you know you're in for a big move lower.
Our friend Michael says, your trading strategies are excellent and profitable. I have a few. Thank you, Michael, for the kind words. Roger was asking, where do we get the indicators? Vince, I know you're going to let Jeff
I'll let Jeff
more about that.
Yep.
I think we've taken up our time. I'll let you just repeat the offer one last time.
Okay, so quickly, tradingwins.com/7, spelled out the word. I think it's in the link as well. Just go to your chat box or you can click the link. But what you're going to get is 30 days of full pro member service that includes our nightly videos, which is where you get all our trade setups. Our live market chats happen twice a week, and you're going to get recordings for those, so you'll build up a library of those. As well, you'll have access to hundreds of hours of our on-demand videos that are on our website, and you'll get that Magic of Ichimoku Pro Training course that you can't get anywhere else, all for $7. Again, thank you so much to MetaStock for having me back on. Really appreciate it. Really enjoyed it. Hope you got a lot of value out of it. And with that, Jeff, I'll turn it back to you.
All right, thanks. Thanks, Vince. I sent Vince a little bit of a message to go a little bit longer because we were having some issues with Bigelow, but we've got him on. So let me go ahead and just talk a little bit about this and what the offer is. For one of the things I'd say for the offer that they just gave you for $7, it's worth it just for the videos alone. I watch his videos every time I get them, and they're excellent market recaps, and he really gives me some pretty good trading ideas as well. So I would recommend you do it just for the video offer. You can get his offer at tradingwins.com/7. I recommend you do it. But we did have a question that was, we've had a lot of questions about, can you use this with international markets? Can you use it with NSE, BSE? We get a lot of customers from India. We do cover. One of the nice things about being owned by Thomson, or being formerly owned by Thomson Reuters, and having access to all of their data. So we cover about 192 exchanges globally, and it works really, really well. The way that we've got Vince's stuff set up in MetaStock, he did a good job of showing you kind of the setups being identified on the chart and how the commentaries work and how they kind of just divide you through things and that kind of stuff. I just want to show you how the scans work real quick. We are running progressively late today, but there's two scans. You can scan it for stocks that have an opportunity but haven't triggered yet, and you can scan it for stocks that have had an opportunity on the previous bar and have triggered before. So I just ran a scan real quick, and I just want to show you what these reports look like. Basically, it just gives you a list of all the long opportunities. There actually wasn't any in the weekly optionable list that I ran today. Everything was short. Doesn't surprise me too much with the market we had yesterday, but it just gives you a list. Of that list, I took a look I opened up McDonald's, and that's this chart right here. Looks pretty good. We just had a setup that finished with a profit. We just had a setup yesterday and triggered in. And here, if we had a little bit more time, we could kind of go in and talk a little bit about how the MetaStock program is actually telling you where you want to go short, what options you should be looking at, what deltas you want to. It does a really, really good job of actually kind of breaking this all down for you. So unfortunately, I'm going to show it more in my session, which is coming up. I'm going to show you a little bit more about how these add-ons work and how scanning works and that kind of stuff, but let's try and get ourselves back on time. So the indicator package is only $4.99 normally. It's $3.99 as the Summit Special. That'll include, if you needed a MetaStock subscription trial, the Unleash the Power of MetaStock, access to Vince's services, and access to Zenith, and that boot camp that I'm going to run on September 20th, 2016. And one of the things that I'm very, very proud of is how many times MetaStock has been rated number. Oh, and to take advantage of that, give us a call, 800-882-3040, or chat online with us at metastock.com/sales chat. Let's go ahead and throw it back to our, talk a little bit about stocks and commodities again. I love this magazine. I've been reading it for 20 years. Ever since I started here, I was reading Stocks and Commodities magazine. I'm really happy that they're sponsoring us. I hope you signed up for your free magazine when you registered for the event today, because it's a lot of really good information every month. And I think you're always getting better at something, or you're getting worse. And so the more you can come to classes like what we offer today, or the more you can read articles and that kind of stuff, if you just pick up a couple of good ideas here and there, it really helps you kind of accelerate your learning process and getting into the market. So we do offer the extended trial for MetaStock. Again, I said we're rated 25 years in a row.